It's about that time of day again. My name is Joseph. It's Tuesday evening, March the 28th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish, but a resistance trend line and a measured move are making this difficult for the bulls to keep control. And we know that sellers are most likely looking for an opportunity to sell into these highs as we speak. The S&P is bullish, but a spike in channel on the chart combined with a resistance trend line are both giving the bears an easy window to take in control tomorrow. Gold is bearish, but a huge overshoot of this channel is telling us to stay patient and look for selling opportunities using the reversal line and battle zones overhead. The euro is bearish with a strong spike lower to fill the weekend gap, which tells us to stay patient for a trap high up around the moving average and watch for one of four likely scenarios tomorrow. The FDAX is bullish, but a recent trap low gave the bulls the opportunity they needed just a few hours ago. So our plan is to wait for a correction and look for a breakout pullback. Boy, we got some big moves on the chart, some big opportunities waiting for Wednesday's session. Got another great newsletter in store for you guys and gals tonight. Plenty of reliable and pretty exciting opportunities waiting for us as we go into the end of this month. Before we jump into the charts, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're not watching the video right now on our blog, if you're on the YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link and come join me on the blog at Sideways Markets for the full-length version. While you're here, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. Many different ways you can follow me on social media. I'm always posting important links, updates, and charts throughout the day. Download those charts right below the video tonight. You can grab all the charts from tonight's video. Download today's charts by following that link below the video and have those charts ready on your computer for tomorrow. And please don't forget to grab your free pass. If you're not an advanced member here at School of Trade, you're going to learn more with me in 90 minutes on that free pass. Grab that free pass in the upper right-hand corner, right, and don't miss another afternoon session. Once again, don't forget, if you're brand new here to the SOT community, right, grab that frequently asked questions on the right-hand side of the website and learn the who, what, where, when, and why. It has been a fantastic month of March. We're wrapping this month up. We have the final few days of this month of March. Tomorrow, of course, being March the 29th. We have nothing major here coming out tonight in the Asian session. So if you trade in Asia into London tomorrow, nothing major on the calendar in the overnight session. And tomorrow, we pretty much have a wide open schedule here tomorrow. We got that inventory report at 10:30 a.m. Eastern time tomorrow morning. So make sure you keep an eye out, right, on that 10:15 alarm, right? We always talk about give that inventory report a 15-minute buffer before the news comes out tomorrow morning. So other than that, that's pretty much all we have on the calendar. We talked about this earlier this week, right? We talked about this yesterday. We get, of course, the Brexit button getting pressed tomorrow. There may be some, right? There may be some whippiness in the European session tomorrow morning. But again, as I said last night on the newsletter, I would expect that stuff has already been priced in. I don't think people are waking up tomorrow morning and saying, oh, geez, right, now I guess we should prepare for this. Something tells me we saw that being priced in last week. So I'm not expecting to see too much drama ahead of that Brexit button tomorrow. Again, possibly a little bit of a low volume environment just because of that, potential for some shenanigans. But again, I would imagine most serious traders have already priced that in last week when we found out early, middle to late last week. With that said, major news tomorrow, right? 10:30 a.m. Eastern time is the only real scheduled news we're worried about here in the U.S. session, of course, affecting, right, the crude oil report tomorrow. And other than that, we talked about this earlier this week. We talked about this last night, right? Thursday and Friday this week, we are expecting this, of course, is the end of the week, the end of the month, and the end of the quarter, right? So keep in mind, right? So we get the month of March, end of the first quarter. We have the last few drops of the month of March, end of the month, and of course we have the end of the week. So end of the week, end of the month, end of the quarter, Thursday into Friday. I'm expecting it to be a little bit light volume. As I said last night on the newsletter, I'm not going to be here for tomorrow and Thursday night's newsletter. I have what I call my strategic break from the desk, and I won't be here Wednesday and Thursday. So last newsletter for me this week. I, of course, will be here, right, via email, right? We guys can contact me via live support on the homepage of the website if you need any help along the way. But please remember, though, end of the week, end of the month, Thursday and Friday. We talked about this in a lot more detail on last night's newsletter, right? Please remember, Thursday and Friday expecting to be a little bit lower volume and a little bit higher volatility, because as we go into the end of the quarter, there's a lot of rebalancing going on as people try to get in and get out of positions to either get their bottom line higher, right, or save their bottom line as we go into the end of that first quarter. So last newsletter of the month here from me. I'll be back, of course, Monday evening. What is it, April the 3rd? We'll come back next Monday, same schedule for next week, be back to a brand new month, right, and a brand new quarter. And don't forget, of course, right, you can always shoot me an email, right, or use that live support tool on the homepage of the website. My email address is jj@schooloftrade.com. Live support on the website if you have any questions along the way. Getting ready for tomorrow's session here. We got some really interesting charts here to look at tonight. We'll go crude, S&P, gold, euro, and we'll wrap up with a very, very perky FTAX tonight. Crude is bullish, but this falling resistance trend line in combination with this measured move are going to make this pretty difficult for the bulls to keep control of this market tomorrow. The bulls had an easy session this morning with a bull channel that pulled back to the moving average and then shot higher right up to finish off that measured move target. The bulls then pulled back, retested the measured move. The bulls pretty much got fat and happy today as this market went higher. Very, very easy trading, as you can see, for the bulls today. After the bulls got their measured move, we then have a series of lower highs, which is quickly closing the door for the bulls and opening the door for the bears. The only way the bulls will get the confidence they need is on a strong push through the highs. But if they don't, watch for those sellers, who, by the way, we assume are already putting on positions. Watch for those sellers to be looking for opportunities to sell into this high. What a great example. I mean, this is about as picture perfect as it gets, guys. Market starts off this morning in a bull channel, and of course, what do we expect in a bull channel? We expect the buyers to want to buy low, right? They buy that deep pullback and they send it up to the high. Not only did they get that high, right, but they finish off a juicy measured move target. Now, of course, testing the measured move is just the first step. What usually happens? Once we usually get to the measured move, we do what? We pull back and we retest it again. So the buyers got literally 1, 2 beautiful opportunities here, buying that pullback and then buying that correction off the measured move for a retest of that high. Now that was the easy stuff for the bulls, because now you can see that series of lower highs now coming down is creating an overhead resistance trend line. Now at this point, this market is still technically bullish, but here's when we start looking at this and say, okay, well, where would the bulls want to be trading right now? If I was a bull, where would I want to be trading? Well, the hard part is you've literally got to be buying down here if you're a bull right now, because you've got that trend line staring you right in the face. This is where things get difficult for the bulls. If we get price going higher, I don't want to buy into that measured move because that's major resistance. This is going to be, of course, as I said here, right, the no buy zone. This is a really, really difficult area here for the bulls. Right now, the bulls still technically have control, but only way I'm looking to be a buyer on this going forward as a bull is if we can get this thing up and then hold a pullback here. But this is really, really tight quarters right here. Not a lot of space. You look at it, it's only about, 20 ticks? Not that much, right? There's not much room there to work with. Not enough to get a lot of buyers interested in this move. I think the biggest problem right now is the buyers just simply don't have a lot. There's no carrot at the end of the stick right now. There's nothing really out there to give those buyers, right, reason to be buying, like we saw back here, right? The bulls had all this incentive to be buying that pullback because they knew they were trying to get to the measured move. Now we're already at the measured move. Heck, we got to the measured move, we pulled back, and we did it again. Once we saw that, trend line comes down. In my opinion, the safest thing right now for the bulls is going to be getting a very strong push higher. We're going to need to see some strength going back to the high. What will happen is if this market can really push higher, that will give buyers confidence that we're trying to make a triple measured move. Now, once they have that confidence, then what the bulls will start doing is they'll start dropping their orders in here on limits to buy, waiting for price to pull back, and they'll probably get it, right, for that move up. So that's going to be kind of a two-step process here now for the bulls. First thing will be very strong, right? Strong push higher, strong enough to blow any sellers out of the water here and prevent them from selling into it. I'm going to talk more about the bears looking for in a moment. If we see a real strong push higher though, that strong push, and we see this all the time, right, in much smaller quarters on a shorter term time frame, but strong push higher, that will give the bulls reason now to get excited again. Then they're not going to want to buy high. What they'll do then is they'll start adding their limit orders now to buy into it, right? And they'll buy on that pullback. So that's going to be the bread and butter for the bulls tomorrow. Starting off with a strong move up, right? Again, it's got to be strong, because the problem is that if we just break above it, now there isn't much incentive there. There isn't much incentive there for those buyers, just in that little tiny range right there. I realize this chart looks pretty big, but when we look at it, it's not really that large. Again, it's only about 20 ticks of room. It's not a very big chart here overall, right? Not a very wide range here overall. So the bulls got to see some real strength. This is a situation where right now we assume there's probably a lot of sellers right now stacking up their orders up through this high, basically calling the bluff of these bulls, saying, you know what, yeah, you might be able to get that high retested again, but I'll bet you're not going to go through that high very far. So here's the bears are watching for now, right? The bears now, obviously, they're looking for that thing to fail going up, pull back, and then failure to sell high. This will be a nice sell opportunity here on the way turning bearish for that move back down. So watch as that market goes up. You're really looking for, do we just blow right through the high, right? Do we blow right through it? Possible. Nice strong bull market today. If it does, look for that dip, right? And then buy it on the way up to that measured move. The hard part is going to be trying to buy inside of this, again, kind of no buy zone, right? Because there's not much room. With that said, price goes up, fails to blow through the high. Now sellers are watching for that failure here, right? And looking to take it right back down against them. As the price moves lower, right, if the price doesn't correct higher, right, if we do get that move going lower, it'll probably be a pretty sharp move lower, just because of the fact that we can see clues here right now that these bulls are probably buying into this battle zone. Again, they got some challenge in front of them, right? There's a big challenge ahead of them. So we can definitely tell these wicks are here, likely bulls, right, scaling into that move as it pulls back into that battle zone. Assuming, though, this thing takes off the downside, don't chase after it. Wait for that little trap high, and then you'll be able to sell from there as well, right? So bears, looking for two examples here: up, failure, and back down. Bears, down, trap high, and sell high. Okay, usually when the bulls lose control, it'll get real violent as it breaks down. Wait for that violent, sharp move down. Don't chase after it. Wait for that trap high to sell high. Again, bulls, careful, careful, careful here. Strength, strength, strength needed here for the bulls, and then buy that dip, right, once we see some evidence that those buyers are here. This should be an interesting scenario. One last thing about the bulls or the crude for tomorrow. You may have noticed I'm not mentioning the API report tonight, because we literally saw nothing, no reaction whatsoever tonight on the Tuesday 4:30 p.m. API report. Nothing, as you can see, right? The market almost said, what API report? We're still scheduled tomorrow for the 10:30 inventories, okay? So be aware of that. But we have zero reaction tonight from the API report, so there's no levels to worry about for tomorrow. It'll just be that 10:30 a.m., again, that 10:15 a.m. cutoff for the inventory traders tomorrow. On lookout there, watch out for those bulls and be ready, right, to be a bear here tomorrow on the crude if you get the proper confirmation on it. About some S&P. The S&P is bullish, but such a strong move higher combined with a spike in channel are giving the bears an opportunity to take control and make a run back to the trading range where the session began. The spike in channel is a big clue tonight, guys. The channel's larger than the spike, which often leaves the market open for a big correction lower, which then gives the bears enough steam, right, enough opportunity they need to take control and send it lower. Sellers need to see price trap high if they can sell into a buyer failure, and buyers need to get this price back above that resistance trend line and hold a pullback. Now, what a great chart here tonight. Day starts off inside of a bit of a range. It's really not a very good looking range. If you're a student of mine or a client of mine, you'll probably look at that range right now and go, yeah, Joe, that's not a very good example of a range. It really isn't, because it doesn't make much sense of that bounce in the middle. But I did my best to kind of figure out what that market was doing. Remember, this was a spike in channel from last night's newsletter. If you watched last night's newsletter,